Lawrence Hugo, welcome to Property Insights, mate.
Good morning, Mark. It's a pleasure to be here.
We get in contact with you guys. Me and my wife, for example, I can say we get in contact with you guys. What sort of happens? Like I walk into your office or however you do the meeting. What do you ask me for? What have I got to give to you? What do you say, Mark? Give us a look at all your income. How does it work?
Right. Well, a good negotiator will first vet the client. What's the pain point? What's going on? Well, we know the pain point is that they're in arrears or they're struggling with their finances. But why are they struggling with their finances?
So what caused it?
Yeah. What's the trigger point? Is the trigger point, okay, well, I've lost my second job, as you mentioned. Is it the income or is it the expenditure? And so part of the role of a negotiator is to assess and audit their client to work out exactly what's going on. Because there's no point for a negotiator to then to go to the bank and ask for 100% debt waiver or 50% debt waiver or what have you. What the banks, they're not silly. What they're going to do is they're going to want to see the income, expenditure, asset liability statement. And then they're going to want you to evidence that with pay slips and statements and so on and so forth. Now, you're going to look pretty silly if, you've asked for a 100% debt waiver, you've presented all the data, and the bank says, well, hang on a second, your client doesn't have a financial hardship problem, they've just got a budgeting problem. So the negotiator...
Spend too much money.
They spend too much money, like restaurants close and so on and so forth. So the negotiator will first go through an audit process to work out, well, what's the problem here? And what exit strategy is there? Because there's other things like, for example, if I've lost my full-time job and all it takes is maybe 3 months to locate a new job, the bank's response, and rightly so, will be, well, that's fine. We'll just put you on a 3-month payment moratorium. That's under the NCCP. They're required to do that.
Hardship.
Yeah, under financial hardship. Exactly right. And that's perfectly reasonable because it's not a scenario, it's not an exit plan scenario where they've got to settle their debts. An exit plan scenario might look like, I have cancer on one side, to the other side where I'm simply not earning enough. I'm working full-time, I'm working part-time on top of that, my wife's working, and we're just not earning the income to sustain our monthly payments with our credit cards.
What do you say to them? Do you say, well, can we refer you to a budgeting organisation? Or what do you do? What do you do to that particular individual?
Quite often, people spend emotionally, right? So we know money is a utility and there's nothing behind money, but it's what the emotions we put into it. And what we observe, Mark, is emotional spending a lot on bank statements, a lot of
What does
betting.
that mean, emotional spending?
Emotional spending is betting.
Right.
Like you buy a nice shirt. Now you're not buying the shirt for the utility purpose of covering yourself. You're buying a nice shirt because, wow, I'm going to look great.
Makes you feel better.
It makes you feel better. That's an emotional purchase. And so people, they make emotional decisions with their money. Now, when we look at a bank statement, now what we might see is all this discretionary spending, but if you take away the discretionary spending and see what their budget is, and if there's a surplus, they should go to a budgeting specialist.
Right.
They don't need a negotiator to do the job. They need a budgeting specialist or a financial counsellor. However, if you take away all that, discretionary spending and still they're in deficit, will help.
Right.
Whatever that spending is, will still help because taking that away is not going to help them, right? So there's other things going on with them.
So the interest rate environment that's been pushed hard by the RBA in order to control inflation in Australia has increased the amount of inquiry that you're getting. And you mentioned at a consumer level, but also at the business level, business borrowers and consumer borrowers. But if you were to, and you've been through this a few times, you've been around since the 80s, so where would you rank the level of intensity today, say, compared to, I don't know, the mid-90s or early 90s when we had that big inflation period? Are we sort of getting to those territories, or is it less intense or more intense? Where would you put it? It's
just different. Apples and oranges. Like in the 70s, it took you 5 years to save 20% for a deposit. And I think the home ownership rate was somewhere around depending on what numbers you look at, between 70 and 76% of households. So 5 years to save 20%, right? Today, it's, again, if what numbers you look at, is somewhere between 60 and 67% of households are homeowners. And it takes 10 years to save 20% deposit. Why is that? I think the question I'd ask myself, and answering your question, the question I'd ask myself is, it's not why is it lower than the 70s compared to today, but why is it so high? Your cost of living is so expensive, and properties, how do people afford to buy into the property market? I don't know.
Well, especially today. I mean,
Especially
it's
today.
mental.
But then, thank goodness you had cheap money the last few years, and it's allowed families to come into the market, whereas previously they were completely locked out of it, right? And so my view is the increase in the rates right now, I think we're coming back to normality.